In this discussion, we will discuss the discussion question of contrast revenue and other financing sources. When we see a discussion question or essay question like this, our goal typically is to expand on the discussion or essay question when time allows, that making it more likely that we're going to pick up on those topics. They're going to pick up on points for an essay question and more likely to be able to add more new information to a discussion forum. Keeping that in mind, let's take a look at this one more time. Contrast revenue and other financing sources. If we see a discussion question like this, our first goal is probably just to take those terms. We got the term revenue and other financing sources, define those terms, and then list the differences between them. That's the best place to start to pick up the most points, most likely. We also might want to think about the similarities whenever we have two different terms. If we want to add more information to it, possibly take a step back and think about the context in which these terms would apply. That being, of course, into financial statements, specifically into governmental financial statements with regard to the other financing sources, usually. And then we could take a step back and compare the financial reporting for-profit to governmental type of organizations. Now, when we think about the term revenue, you would think that that's going to be fairly straightforward. That's going to be a financial type of topic. What is revenue? What should be included in revenue? And in a for-profit type of entity, it's fairly straightforward, but the definition, again, is a little bit vague. I mean, if you think of like the tax code definition of revenue, it's basically anything, it defines revenue about what it is not. So anything that's an inflow of resources, typically we would think of as revenue. So it's actually a definition of revenue more of like what's not included in revenue. And it's going to be a similar fashion for-profit type of organizations. So the default is what is revenue? Everything except what we defined it's not to be. Oftentimes is how you want to think about revenue, which is a little bit more confusing than you might just think at first glance. So revenue is defined as an increase in fund financial resources other than from interfund transfers and debt issue proceeds. So we have that definition of defining it's everything except. Other fund financing sources are increases in fund financial sources from interfund transfers and debt issue proceeds. So we're thinking about the interfund transfers. Well, remember, we're talking about fund accounting. So we have the interfund transfers and debt issue proceeds, which again, because we're talking about fund accounting in that case, then when we have proceeds from debt, we may not record it in a similar fashion that we might think about how we record a loan for an accrual basis, because we're recording basically the short-term flows when we're considering the modified accrual basis fund accounting. It's important to note the similarities too here. We got both the revenue and other financing sources increase fund financial resources. So in other words, you can think of these as similar terms, but they're going to be different in the way they're going to be accounted for. So if we consider basically what would be equivalent to the income statement type of items, if we're considering revenue minus expenses or expenditures to get to what would be for-profit net income type of items, we know that the revenue and the financing sources are going to be typically increases to the equivalent of what the net income under normal type of accounting would be. Also, of course, net income being part of what would be total equity or assets minus liabilities would then be increasing that as well. So both revenue and other financing sources would be increasing what we would think of as equity or what we would think of as kind of the net income equivalent for governmental type of accounting. However, we're going to break them out into their own categories because we have the difference in characteristics of the revenue being everything basically except the financing sources and uses. So they're both going to be acting kind of like revenue we would think would, increasing what we would think revenue minus the expenditures or expenses, increasing what we would think of as net income, what we would think of for-profit as equity, but being broken out in separate categories